It's a day that will be etched in the memories of traders and financiers for generations to come.
September 16, 1992, a day when one man, George Soros, made a staggering $1 billion in a single day by betting against the British pound. This was no ordinary trade, but a bold move that would go down in history as one of the most significant trades ever made. Soros' bet against the pound was a masterclass in high-stakes trading, and it would change the face of the financial markets forever.
With his legendary trade, Soros proved that even the most powerful governments can be humiliated by a single trader with a solid strategy and a lot of courage.
In the early 1990s, the British government was facing a severe economic crisis.
The country was struggling with high inflation, a large trade deficit, and a declining manufacturing sector.
Despite these challenges, the government was determined to keep the pound within the European exchange rate mechanism, a system that tied the pound to the German mark. However, this decision would prove to be a costly mistake, as it led to a significant overvaluation of the pound. The stage was set for a major currency crisis, and George Soros was ready to take advantage of it.
George Soros is a Hungarian-born billionaire investor and philanthropist.
He is known for his aggressive and often controversial trading style, which has earned him both admiration and criticism from the financial community. Soros made his fortune by betting on the collapse of the British pound, but he also made significant profits from other trades, including his bet against the Thai baht in 1997. With a net worth of over $20 billion, Soros is one of the richest men in the world, and his influence on the financial markets is still felt today.
Soros' strategy was simple yet effective. He believed that the pound was overvalued and that the British government would eventually be forced to devalue it. To take advantage of this situation, Soros sold billions of pounds, betting that the currency would decline in value. He also bought German marks, which he believed would appreciate in value as the pound declined. This trade was a classic example of a currency arbitrage, where Soros was taking advantage of the difference in interest rates between the two currencies. On September 16, 1992, the British government announced that it would raise interest rates to 12% in an effort to prop up the pound. However, this move had the opposite effect, as it led to a loss of confidence in the currency. The pound began to decline in value, and Soros' bet against it started to pay off. As the day went on, the pound continued to fall, and Soros' profits grew. By the end of the day, he had made a staggering $1 billion, a profit that would go down in history as one of the largest single-day gains ever made. The consequences of Soros' trade were far-reaching.
The British government was forced to withdraw the pound from the European exchange rate mechanism, and the currency declined in value by over 20%. The trade also led to a significant increase in interest rates, which had a major impact on the British economy. The effects of the trade were felt for years to come, and it marked a significant turning point in the history of the financial markets. Soros' bet against the pound had humiliated the British government and proved that even the most powerful governments can be challenged by a single trader.
The impact of Soros' trade was not limited to the British economy.
It had a major impact on the global financial markets, as it led to a significant increase in volatility and a decline in investor confidence. The trade also marked a significant shift in the balance of power between governments and traders, as it proved that even the most powerful governments can be challenged by a single trader with a solid strategy and a lot of courage. The trade also led to a significant increase in the use of currency trading as a hedge against economic risk, and it marked a new era in the history of the financial markets.
The statistics surrounding Soros' trade are staggering.
He made a profit of $1 billion in a single day, which is equivalent to over $2 billion in today's dollars. The trade also led to a significant decline in the value of the pound, which fell by over 20% in a single day. The trade also had a major impact on the British economy, as it led to a significant increase in interest rates and a decline in economic growth. The effects of the trade were felt for years to come, and it marked a significant turning point in the history of the financial markets.
So what can we learn from Soros' trade?
The first lesson is the importance of having a solid strategy and a lot of courage. Soros' bet against the pound was a bold move that required a deep understanding of the markets and a willingness to take risks. The second lesson is the importance of adapting to changing market conditions. Soros was able to capitalize on the decline of the pound by adjusting his strategy and taking advantage of the changing market conditions. The third lesson is the importance of having a strong team behind you. Soros' trade was not just the result of his own efforts, but also the result of the hard work and dedication of his team. Soros' trade has left a lasting legacy on the financial markets. It marked a significant turning point in the history of the markets, as it proved that even the most powerful governments can be challenged by a single trader with a solid strategy and a lot of courage. The trade also led to a significant increase in the use of currency trading as a hedge against economic risk, and it marked a new era in the history of the financial markets. Today, Soros is still active in the financial markets, and his influence can be felt around the world. His trade against the pound will always be remembered as one of the most significant trades in history. In conclusion, George Soros' trade against the British pound was a historic event that will be remembered for generations to come. It marked a significant turning point in the history of the financial markets, as it proved that even the most powerful governments can be challenged by a single trader with a solid strategy and a lot of courage. The trade also led to a significant increase in the use of currency trading as a hedge against economic risk, and it marked a new era in the history of the financial markets. As we look back on this event, we are reminded of the importance of having a solid strategy, adapting to changing market conditions, and having a strong team behind you. As we reflect on the story of George Soros and his trade against the British pound, we are reminded of the power of the financial markets to shape the course of history. We are also reminded of the importance of having a deep understanding of the markets and a willingness to take risks. Soros' trade was a bold move that required a lot of courage and a solid strategy. It is a testament to the enduring power of the financial markets and the ingenuity of traders like Soros. As we look to the future, we can only wonder what other historic trades will be made, and what other lessons we can learn from the masters of the financial markets.